You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike Tosaw from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster Giovinazzi from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back. It is Monday. It is time to kick off another broadcast week here on the old network. Hope you had a great weekend. Hope you're strapped in. Hope you're ready to go for another combustible, tumultuous week out there. My name, of course, Mark Longo from the OptionsInsider.com. Remind you if you want to join us for some extra goodies, and who doesn't these days? These are times when those goodies come in handy. Great pro Q&A sessions, answering all your questions about the market and vol and options and everything else, as well as awesome options oddities, early access live streams, giveaways, all kinds of fun. The optionsinsider.com/pro, P-R-O. The place to go to kick the tires and light the fires. As we are joined on the Monday episode here today by the rockingest of lobsters, Mr. Andrew Giovinazzi from OptionPit.com, as well as by the uncleest of Mikes, Mr. Uncle Mike Tosaw from St. Charles Wealth Management. I introduce them now because it is time to commence our broadcast week. We know it's going to be another wild one, listeners. So let's start off with a little bit of fun with our 80s Trivia Challenge. Here we go. All right. And in a rare switcheroo, listeners, the Rock Lobster actually in the lead right now. That means, by the rules of the game, the uncleest of Mikes, Mr. Uncle Mike Tosaw, gets to choose our color for today. Mr. Uncle Mike, sir, you get blue, pink, yellow, brown, green, or orange. Do you need me to remind you what the categories are?
No, because I already know. Sports and leisure, whatever it is.
I had a feeling. You're just going to go, you're going to mainline some orange. All right, here we go. All right, get your hands on your buzzers, gentlemen. All right, let's go. Here's the card. Yep, this is a fresh one. Okay. Sports and leisure. What strength testing world championship is held every October in Petaluma, California?
World's Strongest Man Buzz.
Oh, you got a buzz, dude. Okay. The answer is no.
Strength testing, because that's what I was going to go with. So I will say the Highland Games.
That's also a fun one.
Can we have another try?
This one, sure. Why not? Because this looks like
All right. How about arm wrestling?
Okay, interesting choice. I'm going to say no. Mr. Uncle Mike, can you steal?
Oh gosh. Festivus. Feats of strength.
Okay, now this one might have to go to the judges because the answer on this card is wrist wrestling. I don't know what that is. Is that arm wrestling? Is that a euphemism for arm wrestling?
That's totally arm wrestling. Holy gosh.
I don't know. Is wrist wrestling, can that be considered? I might have to go to the judges for that one, because I've never heard it called wrist wrestling in my life. What kind of weirdo wrote this card calls it wrist? Did they not see, Over the Top was around in the 80s. You have no excuse for not knowing what arm wrestling is.
Right.
But
I will accept whatever, because I'm a magnanimous guy and have the lead. I will accept whatever, but I'm like 100 delta. Wrist wrestling is arm wrestling.
I'm gonna say right now, I'm gonna put you down for a half point, and I will investigate this wrist wrestling.
But he got on the second try, though.
Yeah, so
Then I don't think I should get more than a half.
Yeah, a half point.
You should get nothing and like it, to quote the judge from Caddyshack.
Well, but he gave us a shot to guess again.
Yeah, because it's no fun if everyone just swings and misses and then it's over. Then it's like, well, that was a short, no fun segment.
Everybody gets a trophy now that it has to do with Andrew's points. I get it.
You gotta try
how it is.
You gotta try it. You got a shot at it too. You went with Festivus, a fictional festival from the Seinfeld show. So don't get on me for your answer, sir. So right now, listeners, I'm going with half a point for the Rock Lobster. Have you heard of wrist wrestling? Is that just some weird misappropriation of arm wrestling? But hit me up, let me know if you're down with a little bit of wrist wrestling, as we are down for a little bit of the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
Our chat thinks you should have a full point, Mr. Rock Lobster. So we got some Rock Lobster fans in the chat. Interesting. I'm keeping it with the half point. It was the second try. Maybe we'll codify that in the rules, that regardless, well, maybe just to keep the segment fun, we'll let people have a second try, but the second try will have to be for a half point anyway. So maybe that might make more sense anyway, but I've never wrist wrestling. I need to go look up who wrote these cards in the 80s, because they were clearly challenged. But I digress. Let's keep rolling, listeners, out to the markets. Are the markets challenged right now, listeners? This is another one. You're going to get tired of me saying it, broken record, but if you don't like what's going on, just wait 5 minutes. It's also another day where we're just kicking off the show. The S&P's already had about 100 handle range. So we're just living in that world now, listeners. 100 handles before you have your lunch. That's just, or before the option block rolls out. Whichever way you want to measure it by, listeners. It's just another one of those days. S&P came out of the gate hot. Of course, we ended the week last week a little hot after just the mother of all weeks out there. We definitely got into unprecedented territory last week. Top 3 in terms of modern market rallies in the S&P. And then when you sprinkle on the other bits of context, like a global trade war and everything else, definitely unprecedented territory from that perspective. So wild times out there, listeners. And then we came out of the gate hot this morning, S&P rallying up to about 54.5 and then selling off right before the show to about 53.5 before kind of bouncing to where we are right now, right around the 53.80s level, up nearly 20 handles, or about 1/3% right now. So once again, don't like where we are, just wait 5 minutes. We're going somewhere. I think it was the Meatball who said on Vol Views on Friday that straddle in the S&P with 20 minutes to go was still pricing around $45. I mean, that's the kind of movement we're looking at here. I mean, that's on a normal market is literally absurd. $45 for 20 minutes to go in the straddle. Yet that is exactly what we have going on right now. So we're in absurd times. Just bear that in mind. Maybe be judicious, keep things risk mitigated, and maybe keep a little powder dry so you're ready to strike when the moment avails itself. Right now, like I said, S&P up about 1/3, kind of trending up a little higher now, up to almost about a half, about 0.45%. NASDAQ up about 0.15%. The Dow up about 0.4%. And the VIX cash kind of all over the place today, as you might imagine. Looks like we got as low as almost broke the 30 handle, about 30.6. And the high looks like around 35, somewhere in that range out there today. When we kicked off the show, right before kicking off the show, actually, we're at about a 34. The high today, 35.17, yeah. We were at about 34, then we just gave up yet another point out there. So about a 33 when we kicked off the show. If you're wondering, it puts us down, only 16 handles from where we were this time, just on the Thursday show. 16 points between Thursday and Monday. Doesn't happen too often. Listen, we're talking 20-plus handle swings with fixed cash intraday. That also doesn't happen too often. So again, very rarefied air. Tread lightly in these markets is all I'm saying. VVIX 135, down a whopping 30 points from where we were just on the Thursday show, but still obviously very frothy. 135. If you've been listening to our shows for a while, you know Vol used to have a range of somewhere around 75 to the downside, 125 to the upside. It could obviously blow through 125, but once it got north of that, you were starting to really pick up some steam, and it would eventually revert back down pretty aggressively. We're north of that still right now, so just something to bear in mind. But a lot to go on out there. Also, looks like our producers tracking down wrist wrestling. It is a style of arm wrestling which competitors link their thumbs. Okay. I still sounds like arm wrestling to me, but okay, I guess wrist wrestling, a distinct subset of arm wrestling. There we go. We all learned something today. If you want to go check it out for yourselves, I guess go to Petaluma, California. At least you could, almost 40 years ago when these cards were originally written. But I digress. All right. We all learned something today. Mr. Rock Lobster, let's keep that learning train going, sir. As our winner today, you get to go first. Obviously, a tumultuous end to the week. What were your thoughts? We haven't had a chance to talk to you since the Monday show. What were your thoughts when we were just all the animal spirits were carrying the S&P up nearly 10% intraday last week? Then what were your thoughts throughout the rest of the week and, of course, today's action, sir?
Well, I thought what was great after that is we were a whisker away from limit down.
Yes.
The next day. I have to say that the simple thing is that, like Trump or don't like Trump, this tariff policy seems a little, let's just call it unorganized, from being a casual observer. It is apparent they are going to use tariffs to try to raise revenue for the government. So, here are our choices. We could raise people's income taxes, which is, I think, a bad way. We could charge some kind of consumption tax, which is basically what the tariffs are on a bunch of the stupid consumer crap that we buy too much of. Or we can cut spending. Now, I don't know about you two, but the income tax thing is really not a win. It doesn't look like the Republicans are doing anything close to that as far as raising income taxes. I think they're trying to do the opposite. Raising money by some kind of, the tariff is a tax, right? Hoping to raise a couple $100 billion. And cutting spending, clearly no congressman is able to do that of either party, which is, a sad fact. Now, whether we address that elephant in the room at some point, all I'm going to say is, if you're looking at bonds and yields are back up to the 4s, 5% area, I guess, for the 30-year, I believe. I got to look again what the rates are today. So for this whole cycle, interest rates are about as high as they've been after this whole tariff thing came out, which basically means that somewhere along the line, the bond market thinks that Congress, the White House, and Doge and all this stuff that they were trying to fix things. And I think there's a real attempt to try to make things better. Is without Congress helping, instead of just doing sound bites all the time, it's a serious problem. And it could be, let's put it this way, it could become a serious problem. But for right now, the stock market is just adjusting to it. So what you did notice last week as well, toward the end of the week, bank earnings came out. JP Morgan, the way I see it, probably turned in a pretty huge number. Year over year, like a 10% gain in earnings or 15% gain in earnings, something like that. But nobody's going to give any guidance. And I think that's the market we have. I think overall, America generally works, no matter who the president is. But presidents can screw it up pretty fast. The current president is trying to do some stuff to raise revenue and but without Congress cutting spending, I don't know how they're going to do it and how they're going to pay the bills. And defense budget's up another $150 billion. Like, again, it's it's too head shaking. And I think this is the confusion the market sees. Because for a while it looked like there was supposed to be a path, and now there isn't. So how it turns out, I don't know. Eventually the bond market will make Congress do what they want, because interest rates will become astronomically high and there will be a real crisis. And then we will have limit down days. But until that time, we will be bouncing back and forth. So, and then again, the last thing, Nvidia says they're going to build stuff here in the US. They're not going to build it overseas. So it's a lot of like one step forward or two steps forward, one back. Again, I want it to work out because I want the U.S. to do well. When the U.S. does well, generally, globe does well. But again, the whole thing of less spending, less defense spending, all of it, you need to see some follow through. And I think the problem right now, just from what I see the administration doing, is like the follow through is kind of, it feels a little iffy right now. That could change, but it's feeling a little iffy right now. And that's, and I think stocks are reflecting that currently. Iffy.
Feeling a little iffy. That's put it charitable, and we're just, dictating by tweets, and then markets just swing hundreds of handles. Really quickly, because we kind of touched on it, I know people are going to want to know, so I'm just curious. They'll want to know, what were you up to in the mad rally specifically last week? Were you just kind of dialing it back because it was so unprecedented? Or were you slinging 0-day hot and heavy? Were you fade and vol? What were you up to, sir?
I got out of all my long vol VIX too early. I got out a lot of it a day too early, sadly. So I did buy, basically I spent the last week buying some stocks, just kind of buying names that I wanted, putting some bids in, and getting filled. But I think at this point, I expect volatility to be lower, mostly because we now have our random tariff policy. So, if we're not generating those huge days anymore, and it does not appear that there is a great reason to have a hard rally, that's the fastest way for vol to go down.
We shall see out there, listeners. Now we go to the land of Uncle Mike. And yeah, our chat is arguing for the rock lobster to have a full point. But mostly Mr. Uncle Mike is because they like when you get upset about it. So they're trying to needle you a little bit, Uncle Mike. So there you go. A little Uncle Mike tweaking going on in the live chat, which I'm here for. I'm down for. But Mr. Uncle Mike, same question for you. We'll start with the nigh on unprecedented day. Not quite unprecedented, because we have seen larger up moves. But then again, if you add in all the other context, it is definitely unprecedented. What was going through your mind in that just ridiculous upswing we saw, and then the rest of the tumult last week, and then, of course, coming into today, sir?
Well, I think that hedged equity, really, you can really make a case for being long stock, long put in one way, shape, or form based on weeks like last week. And that when you look through it as to what's actually happening, not just last week per se, but just in general, bonds aren't necessarily always going to be the safe haven. In that if you look at the performance of bonds over the course of 2025, you got a little bit of a bid on the 10-year, but not a ton. And so, yes, you do. And I'm not trying to bash bonds. I have a lot of people in as a lot of exposure to bonds. But what I don't think makes sense is relying on price movement for bonds to the upside when stocks go down as a means of diversification. I feel that hedged equity is a much better methodology of doing it. So I guess it's kind of like the old saying, silly rabbit tricks are for kids. Silly investor, bonds are for yields. Doesn't quite have the same ring, but you get where I'm going with it. So on their bonds over the course of the last week or so have just gotten smoked. And you're looking at it from the standpoint of yes, you could argue that you want to hold your bonds till maturity, and that's fine. But hedged equity, no question, not outperformed, but was, in my opinion, a better place to be if you're trying to be a little bit active or if you're trying to be passive in some way, shape, or form, because there's nothing that is more frustrating or irritating than looking at your portfolio and seeing both your stocks and your bonds going down when you're trying to use it as a means of diversification and thinking the bonds are going to save you a little bit. So that's one of the things that I've noticed with this. And I think it's interesting today that we are getting a little bit of a move in the market. 0.75%. That seems like a little bit of movement in the market right now based upon these 5 and 10% days that we've been having. But we're getting that. We're getting a little bit of a rally in bonds as well. So the thing that I'm noticing, and I kind of believed this for the most part, is that you're not always, yes, you can get a flight to safety in bonds. It does exist. It does happen, but it does not always happen. And that's something that I think is very important. The big stock mover on the day-to-day that I'm finding interesting is Apple is coming back. So Apple, the behemoth with which it is, you don't see behemoths move as much as Apple has over the course of the last week very often. When we have Apple moving like we have, we're back over 200 again. We were up to 212 for a little while today, and now it's back down to 204. Apple's trying to act like Nvidia right now, and Nvidia is flat on the day. So we're kind of in bizarro world right now. It's pretty interesting to watch. So we're seeing that, and I feel that they're going to go what they want to do for the time being, and combine the fact that this week's going to be a little bit shorter. We do have Good Friday. It's the Easter weekend coming up, so it's going to be interesting to see. I'm actually expecting less movement this week than last week. I know that's not saying much because we had all the movement last week, but I think that if we are going to have more craziness, I see it happening after Easter, just based on the fact that we have the holiday coming. So that's what I'm seeing right now. And yeah, wrist wrestling is to arm wrestling what futures are to options. It's a different thing. It's different. It's not the same. Andrew should get nothing. He had to get on the second opportunity, the second chance. I didn't even want to participate in it, so I tried to make a joke out of the whole thing because it is a joke. Umbrage, I tell you.
Umbrage indeed. You're a 10-year note guy, Uncle Mike. Do you subscribe to that theory that it was a little bit of a dust up in the rates that finally caused Trump to blink on the tariffs, sir?
No, I don't. I think that it's a dust down, although it's more than dust down in the market that made him blink, if anything. But I do think that part of it he did have planned, just because that was in his playbook so much in this first term. I do think that part he did have as kind of his get out of jail free card. He had that 90-day thing. And I know it was fake news the first time that it came out, a few days before it actually happened, the 90-day thing, but that may have been an experiment through the fake news fakers. And then I'm sure every White House staff has the fake news faker staff on board. And then from there, afterwards, when he wanted to actually see what would happen, I think it was just more of a market reaction than anything. Because if the markets would have remained flat or just gone down slightly, I don't think he would have done anything with it. So I think it's more based upon the S&P than the 10-year note in this instance.
A lot going on out there. Let's get to the options market. We'll get to some of the Apple fun and everything else in a second. Is it a fun day out there in the markets from a volume perspective? The answer is yeah. Once again, 100 handles before we even turn on the mics. You know we're going to have some paper out there, listeners. Right now, the VIX threatening 1 million contracts already, which is a good thing because the ADV is 1.11 million, so it needs to do a lot. This is a good example of really what has to go on in the markets to maintain a north of 1 million VIX. It's a lot of tumult. Maybe the market is not designed for this over the long term, listeners, so that's why a 1+ million ADV in VIX is a hard thing to sustain. 941 on the tape right now. The big dog out there today, listeners, 41,000 of the June 16 puts going up, including a big block of 20,000 of them for 12 cents. 12 cents, June 16 puts kind of an interesting level. I mean, 16 seems like a very distant level, obviously, right now, but you're going till June. June, kind of the summer period where things are traditionally, now nothing's traditional about this market, obviously. I say as I knock a bunch of things off my desk, but nothing's traditional about this market, listeners. But maybe you like those, maybe you don't. So we put a flash poll up right now. You like them, 12 cents. And right now, 71.4% of you want to buy them. 28.6% want to sell those bad boys right now. Interesting stuff out there. Is SPY equally interesting? The answer is yes, over 6.5 million, 6.51 million. That's a banger day for SPY. The ADV, 10.8 million, probably going to hit that. The S, let's really quickly, since we've been playing that game for a while, let's do it in the S because that's where we've been hanging out. The S right now, 1.76 million. So the X actually looking kind of like an average day, which is kind of weird and also goes to show 100 handles. We're used to it now. The S just shrugs its shoulders at 100 handles movement before the start of the show. It's doing pretty much a normal day's worth of volume out there right now. The ADV about 4 million, so might be on pace to hit that. Might even be a little bit light. Let's look really quickly. 0 day, 0 day, 0 day. Looks like we are. Oh no, I see one. I see one here. Actually, I see two, including the DEES 3600 puts going up 10,000 times this morning. So we are 2 out of the top 20 today, listeners, in the SPX are not expiring today. By the way, if you're wondering what the DEES 3600 puts are trading for, $50 roughly, between 46 and a quarter to 50 and a third dollars. They went up as part of a spread. I don't see the other part of the leg, obviously, but yeah, there we go, listeners. DEES 3600 puts. Did you have those bad boys on your bingo card? Small caps looking hot, looking spicy. 1.03 million contracts on the tape. The ADV about 1.7 million. And we go out to the land of the Qs, the NASDAQ, 3.3 million on the tape. The ADV about 5 million. Listener, let's get out there. And our chat was just teasing me about this. It's a weird day, listeners, when the dumpster fire that is Ford is breaking into the top 10 today. Number 10, exactly 260,000 contracts is what it cost you to break into the top 10. I've been a little busy. I don't know if you know this, listeners, but some shows going on, so I haven't had time to do my aggressive weekly overwriting of Ford. So that's good. I'll get a little bit more juice for a little bit higher strike when I do set about going about it there. But Ford popping today, GM, I believe, as well. Looks like Trump may be talking back some of the auto tariffs. We shall see. As someone who is out there fighting the car wars around Liberation Day, I can just say it is a wild scene out there. If you want some of the more popular cars right now, at least around the Chi-Town area and out in the hinterlands, there are none available. You are buying IOUs for factory cars that are probably 2 to 3 months out. So I have a brand new car I just bought. If you want to pay me top dollar for it, I'll flip it. We'll see. I might just do that. I might hit some bids. We'll see. The trader in me cannot be denied, listeners. You want to pay me 25% over what I just paid for this car? We'll see. We can make something happen. Either way, Ford, about $9.70, up about 35 cents or about almost 4%. So one of the better days and to the upside in Ford in quite some time. Still shy of $10, which again goes to show the old dumpster fire adage. But I guess today Brian Overby is selling or trading options, I should say, on stocks that are a little bit higher. He'll be happy. Number 9, we got Intel also popping today, 2041, 281,000 contracts on the tape for them. They've been on quite the rampage of late as well. They're on again, they're off again with everyone else out there in the tech world. Today they appear to be on again. Number 8, to China we go. It is Baba, 285 on the tape. 114.5, up about $6.50 or a little over 6% out there for Baba. Number 8 on our top 10. Number 7, Meta. 531 3/4, off nearly $12 or a little over 2%, about 2.2%. Obviously, whenever you're in the crosshairs of the government, not exactly good. But of course, it's no secret that Zuckerberg's been making nice with the administration these days. So clearly, that was with one eye towards the outcome of this pending procedure. So we'll see how this goes out there for them. But right now, the market's not liking what's going on. I mean, I guess dire prognostication. It is an antitrust case, so if they lose, they could break up, have to get rid of Instagram, have to get rid of WhatsApp. So Instagram, obviously a big driver for them. So gets all the kids in who wouldn't be caught dead using Facebook, but they love a little bit of the old Insta. Good little bait and switch there. Either way, number 7, Meta, 293 on the tape. Number 6, to our A tech strip we go. We kick it off with AMD today. 95.16, up about $1.75 today. Good for 322,000 contracts. And the number 6 spot, number 5, keeping it in A tech names. And it would be if I hadn't accidentally deleted the one I just had up. There we go. It is Amazon, number 5, 489 on the tape, off about $4.50. Trading 180 and about a half right now. Looks like they're kind of coming for it today out there, which is interesting because most of the other names sold off earlier and then are kind of rallying. Not the Amazonians today, though. Number 5, listeners, 489 on the tape. Number 4, we take a brief break from A tech names to go out to P names like Palantir. 92.87, up 4 1/3, or nearly 5% today. You know this name. They've been all over the freaking place. They were $74 last Tuesday. So if you're playing the home game, that is $18.50 to the upside just since last Tuesday. But we all know it can go right back down. It can go right back up. These are very wild times out there. Number 4, Palantir, 581. Number 3, the fruit company Uncle Mike was just talking about. Apple, nearly 205, 204.89, up $18.32. Well, that's over the past 5 days. It's up $18. We'll get there in a second. Today, it's up $6 or 3%. Got as high as nearly 213 today. So this one's been on quite the tear. And if you're wondering, yeah, last week it was 169. So yeah, what's a good 35 handles to the upside in a massive Leviathan like Apple? Again, another one, not an accident that Tim Cook was there at the inauguration and gave money to the inauguration fund. He saw the writing on the wall, and he's trying to make sure the place where he produces the lion's share of his goods, that the tariffs don't hit them too hard. Either way, number 3, the fruit company. Quite the rampage. In fact, kind of going along the lines of what we just did with Nvidia last week, something similar. In fact, the puts line up almost exactly, which is kind of eerie in Apple right now. Right as the show started, the DEES par puts, the DEES 200 puts, were trading for exactly the level that the Nvidia par puts in December were trading for last week, $18. We said that must be a prophecy. We have to ask about it. So we said, gun to your head right now. You got to hold the position through the end of the year. Are you buying or are you selling those DEES 200 puts in Apple for $18? It's flying fast and furious. It was just almost exactly 50-50. It has now gone 55.6% want to buy them for $18. They are not liking the prospects of Apple in the near term. 44.4% want to sell them. Get over there and make your voice heard. By the way, in terms of those VIX puts, 12 cents. Are you liking those? About 70% of you want to buy those puts right now. I get it. It's only 12 cents. It's kind of a cheap nibble. You can argue the strike's maybe a bit of a bridge too far, but you're paying 12 cents. So sometimes you get what you pay for out there, listeners. And then number 2, listeners, we go out to the land of Tesla, 248.91, off about 1.45 million. I was talking with someone over the weekend who's one of the earlier adopters of Teslas that I know, and he has washed his hands of it completely. Not for any of the political reasons. I'm sure it doesn't help, but really just because he doesn't like the cars. So interesting. Tesla coming down on it, 247.86, off about $5 or about 1 3/4%. You know the run that Tesla has been on of late. Let's see, how low did it get last Tuesday? 217.5. So again, what's another $30 and change, $30.50 in a week amongst friends. Number 2, Tesla, 1.42 million, and the big dog once again, Nvidia, 2.61 million, 110 3/4. Kind of unched right now. Again, 2.61 million. How did our poll go? Do people want to sell or buy those DEES par puts in Nvidia for $18? Well, you got to stay tuned. We'll find out in a little bit, listeners. First, let's go around the horn. Our earnings popping off. We're back in it, listeners. If you wanted some hot earnings numbers, some hot earnings action, we got you covered. Head on over to the website, theoptionsinsider.com. Click on the Options News and Articles tab. You will get all the earnings data you could possibly handle and more completely for free because we love you folks. All right, and we had some financials popping off on Friday. No surprise, their trading desks doing well. The rest of the business, no one knows, because who can give guidance in this market? No one. So we are literally living tweet by tweet, listeners. So kind of a challenging environment to give any guidance. So going to be a somewhat, not quite unprecedented earnings. Well, I guess if you get the context in there again, it kind of is unprecedented. Again, no one's had to do this during a massive global trade war before, but that's where we are. This week, we have Bank of America tomorrow, Citi, J&J, and PNC. We've also got IB and United Airlines tomorrow, Wednesday, U.S. Bank Corp, Travelers, and Alcoa. If you like yourselves a little rolled aluminum, then there you go. Used to be the big kickoff for earnings. These days, no one's really hanging on Alcoa. And then Thursday, Amex and Ally, old friends Ally and the old Netflix out there. Again, if you want all that data, head on over to the website because we got to head on over into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
Our chat is trying to buy my new car with Shiba Inu. That ain't happening. I already got some Shiba. I'm good. Uncle Mike, though, he might be interested in selling his car for Shiba. I've heard through the grapevine that he loves himself a little bit of that crypto, which if you like it, listeners, stay tuned. Should have a fun one coming up a little bit later today. But now we go out to the land of odd, weird, unprecedented, unusual, call it what you will, options paper. I always like it when we squeeze in some newcomers. This one brings a smile to my face for many levels and many reasons. This is a newcomer. This is ONDS Holdings, Inc. Ticker symbol ONDS, O-N-D-S. It looks like they do autonomous systems, maybe for cars here. Ticker symbol, again, O-N-D-S. Trading right now, listeners, a whopping 91 cents, but they're popping hard. They're hot today, up about 9 cents or 11% out there. So a banger day, hot day for ONDS. And on the year, it's been kind of a nothing burger year. They were about 91 cents. In fact, they're literally unched on the year. They were 91 cents a year ago. They are 91 cents now. They hung out here. They got as low, looks like, back in August of last year. Actually, before that, July, around 54 cents. And they did have a pop with everything else after the election heading into the start of the year. So they actually kicked off the year. It's kind of one of the worst things you could do, have your apex for the year, literally the first trading day of the year. $3.40 they got to intraday on January 3rd because they have not looked back, and it also makes your year-to-date chart look terrible. You're off $1.75 now, or 65% year-to-date. So it's been a bit of a rough year. Again, year-to-date, calendar year, they have literally treaded water. They are exactly unched. So what did our Eye of Sauron find out there? Again, the stock is 91 cents. You could argue that the stock is an option. In fact, we did this question of the week not too long ago out there. I know a good chunk of you cut it off at $10, and a bunch of you are no limits wild men, but most of you seem to draw the line at the lowest of $2, which this would fall below. But what do we find out here, Mr. Rock Lobster? Somebody swinging for some upside in ONDS, and they said, you know what? 91 cents, that's too rich for my blood, sir. But I shall buy the SEP 1/2 instead, and I shall pay roughly a third of that value, 35 cents, 4,335 times. And then you know what? I like it, so I'm going to buy another 3,600 for about 30 cents. And I'm going to buy some more, about 2,100 for also 35 cents. I'm going to do a total of about 10,000 on the day. So Mr. Rock Lobster, another fun one out here, another cheapy name that folks are just swinging to the upsides. Good thing the Viceroy is not here because I think he would take a dim view of this one. What are your thoughts? 35 cents for ONDS when the forever call, sir, is a mere 91.
The Viceroy would do his best Tosaw imitation and throw his hat into the dust and scream umbrage over that purchase. Like the calls are already offered 30 cents. You just paid 35 from it and they're already a nickel against you. That's just wrong and sad. I feel sad for the 10,000 lot buyer. All it is a tale of sadness and woe already. And if the stock is 90 cents, don't buy the options. My gosh. How many times do we have to say it on this show?
So you're going to cancel that newsletter of pay a third of the value for the stock for your next options trade? It's going to be a hot one, sir.
Yeah, it's like it almost actually makes a covered call. Like, okay, I'll sell those for 35 cents. I'll buy the stock for 90, and you almost have 100% return on the covered call. You do have 100% return. Like, you know, you gotta be feeling it, man. They're feeling something big. And autonomous self-driving, the stock was $2. It's got a chance, but I would just, I think you just want to go with buying the stock.
Yeah, it's kind of hard to argue against the forever call in this moment. What do you folks think, listeners? You like paying pretty much a third of the value of the stock for a call that goes away in September, and you got to really move to get there. The stock's got to move over 50% just to make these calls relevant. Are you down for a little bit of that, listeners, or are you just going the forever call route? Or are you going the sold to you route and take a little bit off the top out there? Interesting stuff as we keep on rolling. Another newcomer. This is BYRN Technologies Inc., ticker symbol BYRN, BYRN. They're out in Massachusetts. They have subsidiaries all over the globe, including South Africa. And I'm not sure what kind of tech they do. But let's see. Today they're up $2.50 or 13, almost 14%, trading $20.41 right now. On the year, it's been a pretty good year for BYRN Tech. They were $14.17 a year ago, so up about $6.10 or about 43%. That said, this is another one that had a nice run post-election and started off the year pretty hot. They got all the way up by right around Valentine's Day, like a lot of names did. They had their apex around Valentine's Day. Got up to about almost $35, 34 3/4 before selling off again. Oh, wow, last week it got down to $15. Wow. 14 3/4 last Wednesday. So it went from $35 on Valentine's Day to 14 3/4 last week. So I guess if you liked it, you had the fire sale, $20 off the top. My goodness. And then rallying back up now to about 20 1/3. Interesting stuff out here. It looks like they're a defense name, it looks like here. So some analysts looks like they're lifting their estimates. Again, I don't know which specific aspect of the defense sector they are in, but getting some good news out there, it seems like, of late. And what do we have out here? Once again, Mr. Rock Lobster. Well, first off, we got a market that is an atrocity, but then again, it is BYRN, so not exactly the hottest name in the docket. It does an ADV of 733 contracts, listeners. We're doing way more with the paper today. Yeah, in fact, this name is doing about 6 times their average volume already, so they're already coming on some people's radar. And what caught our eye, listeners, was 1,723 of the D's 30s. They got a market of 35 cents at $2.40. They said, I shall pay $2.30, good sir. Well, see, first off, they traded a little earlier, I think 15 seconds earlier. They got 205 at 2.30, so that's a much better market. And they said, I will pay $2.30 774 times. Then they came back later. They got 35 cents at $2.40. I got a feeling they're bid a little higher than that if they just sold them at $2.30, but I digress. So they said, I will pay $2.30 again, 1,723 times. Looks like a total of about that many, about 2,600 or so have gone up on the day. So Mr. Rock Lobster, D's 30s. I mean, it was almost $35 back in February. It was also $14 last week. D's 30s, $2.30, a 77 vol. What are your thoughts, sir?
Yeah, I thought these calls looked pretty juicy when I saw them. However, I mean, let's see. They paid $2.30 and they're already $2.53. So I think this stock could be a little squeezy candidate. It appears to be to me. Because right now, it's not quite squeezy yet, but it's on its way. Yeah, and somebody reached, it was a $34 stock. I don't think these calls are an unreasonable purchase for the amount of time. But I think you could do better. I think you could do better trades, risk reward odds, and buying calls that are $10, 50% out of the money. At least they have time. But hey, they're up money right now. So stock up, vol up. So maybe traders are thinking this is going to go back to $30 really quick. And in that case, they're doubling their money on their calls pretty easily at that point.
You like these, listeners? You like a little bit of burn tech for $2.30? You are getting some duration. Obviously going to get a couple at least earnings announcements between now and December. So an interesting one. It was north of that not too long ago. It was also pretty much half of that just last week. So intriguing stuff out there. But you know what's always intriguing? It's Uncle Mike. So let's get to the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, everybody. Let's do it. Uncle Mike going to hold court for 10 minutes on the myriad nuanced differences between wrist wrestling and arm wrestling. Have at it, sir. The floor is yours.
Funny you should ask, because I've been Googling this whole time on that notice.
I had a feeling you've just been stewing. I could tell.
No. I want to talk today about protective puts in a market like this and what they really mean, what they really are, and kind of just getting back to basics in certain ways. So I'm very much of the school of thought and the deep belief that you cannot get rid of risk with options. You are simply shifting risk whenever you're putting on some type of an option trade. Now, of course, I always have the disclaimer. Of course, if you're trading a 100 lot, that's going to be more risky than a 10 lot. But you're never going to fully get rid of risk. It just doesn't exist. You're going to shift risk. So, for example, let's say that you are long stock. If you compare being long stock to being long stock with a married put, yes, the long stock and the married put has less downside risk, but it's going to have more time decay risk. So if the stock goes down to zero, let's say, of course, the married put position would be better off, or I should say less worse, if you will. But let's say the stock stays the same, then you're going to have time decay on that married put. And you're going to be in a more risky position if the stock stays the same because of the fact that you have to pay for the time decay. And of course, it's going to underperform should the stock go higher. So have that mentality with everything with which you're doing, whether you're doing long stock with married puts, whether you're doing covered calls, whether you're doing spreads, whether you're doing vertical spreads, horizontal spreads, diagonal spreads, butterflies, condors, you name it, in some way, shape, or form. Positions could be better in certain ways based upon option pricing and things of that nature. However, you're never going to get rid of risk. You're only going to shift risk. Now, the reason I bring that up in a market like this is that we're coming straight off of a 50 VIX. And so we're down to a 30 VIX now. So now it feels like a 30 VIX isn't that big of a deal after being at 50. It's just kind of funny how the perception changes. In the Chicago area, it feels like it's warm today because we're going to hit 60 degrees. However, our listeners in Florida are probably shivering just thinking of such a thought. But the fact that we are at a 30 VIX right now, one of the things that I'm noticing for rolling my puts, rolling my protective puts to the next month, or rolling covered calls, whatever the case may be, I'm going to get more premium for covered calls for May than what I did for April in general, because we're going to have higher volatility. I'm going to have to pay higher premium for protective puts than I did. I'm going to have to pay higher premium for protective puts in May than what I did for April, because volatility is higher. So with that being said, because volatility is not constant, because volatility moves, if I want to keep the same risk for this coming month that I had the last month, I'm going to have to shift risk a little bit more. So some of the things with which I'm going to be looking for with regard to the covered calls, if I want to have more potential upside, maybe I can sell covered calls a little further out of the money than I did the month previous, or do I want to get more premium this month than I did the last month and stay at the same strike prices. Who knows? That's something that I'll be looking at as we get closer to expiration. The same would hold true for protective puts on long stocks. Would I want to actually maybe sell puts a little bit further out of the money, take on less protection because I don't want to spend as much money? I'm going to go higher again. Who knows? Or do I want to consider taking on the same protective puts and maybe creating a spread? Whatever the case may be, it's all going to be involving shifting risk. And that's an undeniable truth in the world of options. And I would encourage all of our listeners not only to practice it, but embrace it, because it will be helpful when selecting strategies.
All right, listeners, now it's time for us to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, listeners, let's do it. Let's go around the block. First off, how are we hanging here to end the show here? The S&P back in rally mode, up about 0.85%. The Dow up a similar percent. The NASDAQ up about 0.2%. VIX cash continuing to give up the ghost, about 32.90 now, off about 470 today, and obviously down from where it was at the start of the show, which was a 34, then a 30, actually 30, it was 33 right about when we kicked off the show, so down about 1/10 of a point there. So it looks like, at least for right now, we're back in a little bit of bullish mode, but again, you don't like that, just wait 5 minutes. And as of right now, listeners, let's pay off some of our questions of the week from last week. We asked you about on Vol Views on Friday that VIX June 50 par 150 fly going up for $1.50. Do you folks like it or not? And you were kind of almost 50-50. Some of you folks liked it. Some other folks thought it wasn't floating your boat. I get it. It was kind of a weird one. That's why we asked you folks. You couldn't really make up your minds on that one. We also said the SPY straddle. This was on Thursday going into the close for Friday. So a full 24 hours, that SPY straddle was trading for $16. Did you want to buy it or sell it? 2/3 of you exactly said you wanted to buy it. That was indeed the right course of action. You got to be hardcore to sell at the money straddles and SPY right now. And we also had that was the VIX call fly out there. That's the same question. And then we also had, April 40s last week. We talked about that on the show. They traded for $3 in VIX. We said at that price you were a buyer or a seller. 56.7% of you wanted to sell them. 16.7% wanted to buy them. And interesting stuff out there. And the Nvidia DSPAR puts, nearly 60% of you wanted to sell those, 59.2%. 25% say I'd buy those for $18, and about 16% said you're staying the hell away from Nvidia. Speaking of staying the hell away from things, we also had a flash poll during all the madness last week. We said, quite simply, are you still trading 0-day options right now, or is it just too wild? And nearly 80%, 78% of you said, no way, Jose. 22% said, you're still in there. So 22% of you still slinging that wild paper. Right now, you folks are still kind of split. 53.8% want to sell those Apple DSPAR puts. 46.2% want to buy them. And about 2/3 of you want to buy those June 16 puts in VIX for 12 cents. Our actual question of the week, really quickly, then we got to get out of here for this week. We said VIX currently around 35 when we posted this. Will it be higher or lower at the end of the month? So is this trade war kerfuffle going to last through the end of the month? 55.6% saying lower, 27.8% saying higher, and about nearly 17% of you saying it's going to be right around the 35 level at the end of the month. Mr. Rock Lobster, sir, what are you keeping an eye on until your next appearance? And then where can folks go if they want more Rock Lobster goodness, sir?
You know what? It's earnings week. Bank earnings are pretty good. Let's see if everybody else has some decent earnings. My guess is the earnings are okay, but we're going to give you no guidance because we don't know what's going on. I think we're going to hear a lot of that. And if the market keeps hearing more of it, maybe they'll start to accept it and roll on. And if you want, 888-TRADE-01. I've been teaching retail traders now for 14 years, almost as long as I was a market maker, 16 years. So holy gosh, almost too much options for one person to endure. So anyway, optionpit.com if you want to learn more, to earn while you learn about trading these option things.
There you go. Earn while you learn, listeners. OptionPit.com. And Mr. Uncle Mike, same question for you. What are you keeping an eye on till the Thursday show as we're living in a tweet-by-tweet market? And then where should folks go if they want more Uncle Mike goodness in their lives?
Just watching the tweets, watching the markets, watching the bonds, watching the stocks, watching everything at this stage. I don't think this has been one of the biggest you need to watch everything markets I've ever seen. If you'd like to have a conversation with me about financial planning using the option product potentially, feel free to check out my website, stcharleswealth.com. Set up an appointment with me. Would love to have a conversation with any and all of our audience members.
There you go. Check them out, stcharleswealth.com. That is going to do it for us on the option block. Back in a little bit, listeners, with some special guests in the world of crypto to break down all the madness that's going on out there. Spoiler alert, it is a lot. All this madness has carried over into many other asset classes, as you've seen from the crypto rundown, you've seen from the futures rundown, TWIFO, and everything else we have cooking here on the network. So back again with our usual array of fun stuff this week, listeners. So should be a fun time. Got a pro Q&A. If you got more vol questions, I got a feeling you do. We had Dr. Vix in the hot seat for you last week. This week, we've rung the bell for none other than Mr. Vixologist. So you're going to have 2 back-to-back awesome vol pro Q&As. So get your questions. Start getting them in now, quite frankly. I think it's the earlier the better with those. They're usually pretty spicy and pretty fun, and folks have a good time. And they're usually a lot of questions come in, so get them in over there right now. Listen, if you're not part of the pro yet, you want to play along, join the pro Q&A, and why wouldn't you? Get on over to the pro, theoptionsinsider.com/pro. You could argue it was kind of designed for markets like this. So get in there. Who doesn't have questions about vol right now? That's the place to go to get them answered. And then we'll see you back here on Wednesday for our doubleheader of OBC and, of course, the futures rundown. And then Thursday, I will be beaming in from the Southern studio for the next episode of the Option Block. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.